G'day YouTube. And here I am. I'm in my office, just sitting here. It's a public holiday today in Perth, and I'm just sitting here looking at the market. It's about to close. It's getting on for 2 o'clock in the afternoon here. Wet, wild day here at the moment. So I'm just sitting here, just looking at a few company reports and just going through my normal day's routine. And what I've decided I'm going to do is just do more of an overview of my whole process of trading through the idea generation right through to when I sell the stock and the trade's over. Just for people who maybe haven't traded before or just don't know where to start, I just thought I'd give a bit of a foundation of a possible method you could use, and then you can build your own structure and your own system from that foundation. So here it goes. It'll probably be, I'm not sure how long the whole video will take. I haven't done it yet, so probably maybe half hour to an hour, I would think, the whole thing. So hopefully you can sit through it and you get some value out of it by the end. So I'll talk to you at the end.
Hello and welcome. This is the 3 keys to trading, how to build your own trading system through a repeatable process. So today I'm going to take you through the 3 distinct parts of trading, and these are the 3 things you have to master if you want to be a consistently profitable trader over time. Now, it's not unusual to be strong at one thing and not so strong at the other, and that's pretty much, I think, most people are going to be like that. But you really do have to have a foundation in these 3 parts of trading if you want to be successful. So don't ignore any part of it. Okay, so number 1 is idea generation. This is really important. You've got to have you just got to keep the ideas coming. When you're in a slump, sometimes it can be very easy to ignore the market and not want to do the work. If you want to be a successful trader, you can't do that. The ideas just have to keep coming. It doesn't matter if they're good ideas or bad ideas. Just make sure you've got ideas. You're always on the lookout for new ways to look at things, just things you haven't heard of before. You just got to keep them coming, and you can run your ruler over them yourself. But always be looking to generate ideas, and we'll talk a little bit about that soon. Number 2 is analysing the stock. So once you've got an idea and you're working on the idea and you come up with a stock that sort of supports your idea, you've got to analyse it to make sure it's it is quality. Or on the other hand, you might analyse it and it may not be quality. It might be a terrible stock that you want to play on the short side. So you've got to have a system to analyze the stock and either disregard it. Sometimes you can disregard a stock very quickly by looking at a few figures, or you want to delve more and go into the stock. And this could take several hours. Sometimes I might spend 3-4 hours just looking through a company report, and I still might disregard it at the end of it. So there can be quite a lot of work in analyzing a stock, but of course it's a very integral part of trading. And number 3 is managing the trade and the risk. Now this is broken down into quite a few parts, and of course again it's a very important part of the process. When you buy, when you sell, the remaining patient while the trade is on. You've got to give the trade time for the market to do the right thing. So it is an integral part again of the whole process, and I would suggest maybe the hardest part to get right, because this is when the money's on the line, and this is when you can get emotional and do things that could be irrational. So it's probably the part of trading that takes the longest to master. Okay, so for idea generation, I'm just going to run through a few ways to get ideas. And the first one, which is I think maybe ignored, is to tell everyone you're a trader. And even if you're not a full-time trader, or you're just starting out, just tell people that you trade the ASX, and you can tack it on. When you meet someone and they say, "What do you do?" You could say, "Well, I'm a plumber," or "I'm a postie," or I'm whatever. And just so, and I also trade the ASX, and just see what sort of response you get from that, because some people just disregard that and go straight back to your occupation, but that will spark some interest in some people as well, and they'll ask more about your trading, and you might learn about them. Maybe they're a trader as well, and over time, what will happen if people know that you're a trader, you will attract a network of people that trade also, and you can start sharing ideas, and bouncing ideas off people. So just be really open about it. Tell people that you're a trader whenever you meet them. Number two, now this is, as I was saying, these are my ideas. So you don't have to follow any of these, but this is something I do. Is I watch the Sky Business Channel in my house. I work from home, so it's on pretty much all day. From when I I get up and exercise, I come home from about 7 o'clock in the morning till probably about 3:30, 4 o'clock in the afternoon. That's WA time. It's on. It's on in our house, and you're always listening. I'm always listening to what other people are saying. You'll find there's regular guests on there. You'll find people that you can relate to, that seem to make sense to you, and you'll also find people that you completely disregard, that you will think they don't know what they're talking about. They might just have a different philosophy, but it's a good way. I've had some fabulous trades just listening to the people on that channel. Again, it's not about listening to what they say and then just going to put the trade on. It's just getting an idea and then expanding on that idea yourself. So if you are home during the day, I suggest it's a good way to generate ideas. If you're not, then you can't do that, obviously. Number three, hot copper. Now, some of you are probably reeling back in horror that I would put hot copper on there. If you don't know what hot copper is, it's a forum with I don't know, hundreds of thousands of mostly idiots that get on there and ramp up stocks. But again, a bit like the Sky Business Channel, you're not there to listen to them and trade what they say. You're there just to maybe spark a bit of interest in a particular stock or a particular sector, and then you expand on it yourself. So I never ever respond to any posts or anything on hot copper, but I do read it. I do just have a look what everyone's talking about. Sometimes there are a few posts on there that write some good stuff. And then, like I say, it's about just getting the idea at this stage. Well, we're not making the trade on what these people say. So have a look at forums. There may be others out there, but I just look at hot copper myself. hotcopper.com.au, I think it is. Number four, I call this freestyling. And this is what I normally do on a Sunday, where I'll sit down and I might just start looking at a stock. And then from there, the ideas can just start to come, and you'll look at other stocks in that sector. You'll look at competition to that particular stock, and next thing you know, you've gone from looking at the mining sector to looking, at something completely different. And you stumble across a stock that you may have looked at in the past, and you're having a look at it again. It's just a good way to do. Like I say, for me, I do this on a Sunday. I sort of sit down and freestyle, and just have a look at wherever the wind takes me, basically. And I find it a good thing to do on a Sunday when everything's pretty quiet. And number five is always be on. Now, what I mean by that is when you're out and about, and you might be just walking through the city or whatever in your own suburb, and you'll see something that will spark interest. So if you're always on and you're always thinking about the market, and maybe it's a bit of an obsession with me, but if you just your eyes are open to maybe a product as you're walking in the shop, and you see something, or a shop that you might buy something at, and you can just have a look, see if that's traded on the ASX. It's just a matter of always being on and always being open. Have your eyes open to any potential potential trades that could generate from just things that you see in your daily life. So that's just an outline of idea generation. You've just got to keep them coming. The main thing is that you've got to keep them coming, whether you're having a good run or you're having a bad run. And it's hard when you're having a bad run to be even thinking about the market. Sometimes it's that bad you don't even want to think about it. But if you've always got new, fresh ideas coming on, you can always just stay a little bit motivated, I find. So have a plethora of ideas, and then as you go, you can just disregard the ones that you don't want, and you'll still be left with some good quality trades, hopefully. So that's idea generation. That's step one when you're trading. So step two, analyzing the stock. Now, as you're probably already aware, stock analysis is broken down into two parts. First one being fundamental analysis, where you have a look at the facts and figures about a company, reading their company reports and any announcements that they make. And you might want to read what analysts are saying about a stock. And number two is a technical analysis, which is looking at the chart. As I've said before, I'm 80% fundamental analysis. I will look, maybe 90. I will look at the a tax return, and at the end of it, if I think it looks like a quality company that I want to be in, then I will have a look at the technical side of it just to try and gauge a bit of an entry point. So the technical side may delay me from buying that stock, but it more than likely won't stop me. It'll just help me time it better. So what I'm going to do here, I'm going to bring up a tax return, a company report for a company which is Hansen, which is one I've been looking at lately. HSN is the ticker code, and I'm just going to show you fairly briefly how I look at a stock, the figures that I'm looking for, and how I'll read a report and give you a few tips on what makes a good company and what makes a company less ideal. Okay, for all of you who haven't seen one of these before, this is a company return. The financial information for the period ending 30th of June 2017 for Hansen Technologies. HSN is their code. So when you look at one of these, this one here starts with the sort of an overview of what's happened for the year. It'll tell you what the revenues and those sorts of things. I personally don't pay too much attention to that because all that information will come later in the return, and you can read it for yourself. So generally skip over that part there. I may come back and look at it later, but for now, not interested. Keep scrolling. Now this is fairly important stuff here. This is what the CEO, the Chief Executive Officer, has to say. Now the CEO is the most important part of any business. You've got the board that overlooks everything and may determine the strategic direction, but the CEO is the man on the ground. He's the man making the day-to-day decisions, and his opinion is very important, and it's extremely important that he's very good at his job. If you want to invest in the company, the man with his hand on the button has to be very, very good. So reading what they have to say, you can get a sense of what type of person he or she is, and whether they're full of spin or whether they are. Personally, I prefer to see that they're a little cautious. I don't like to see CEOs with grandiose plans. I mean, it's great if they've got plans, but I like them to keep those things close to their chest and just be a little bit cautious, just to keep expectations a little lower. So you can see with Hansen here, they're talking about their year. Business now employs over 1,000 people, 40 nationalities, during the year, we commenced a number of exciting projects. We continued on the company's acquisition strategy. They got 2 new acquisitions through the year. It talks about them there. Talks about the financial performance. So that's what the CEO has to say, and that is a good way to start a return, is to have a look at that. So you can read through all that. it is important stuff, but really what we want to do is get to the numbers and have a look at them first, and then we'll get back and explore this more later if need be. So I know in this return the numbers start at page 33. So this is what you're looking at here, the statement of comprehensive income. There's a few names for this. Personally, I call it the profit and loss, the P&L. So this shows revenue for the year, and you compare it to 2016. You can see it's up fairly significantly. What else we got there? And that's the revenue. Underneath you've got the expenses. You can see how it's broken down there. You can compare it to last year of what's been happening. So you can see the revenue is up. What's that? 26,000, but also the costs are up. So 26,000, 26 million, but the costs are up 30 million. So you question what's happened there for the costs to go up. And there's nothing. This is a fairly straightforward company with their reporting. So there's not a lot there that sort of raises too many eyebrows for me, but you've got to assess that for yourself. Now the next page is the statement of financial position. I call this the balance sheet. This shows their current assets and their current liabilities. So as you can see, they've got cash in the bank, $15 million. They're owed 37 million in receivables. Other assets, they've got $7 million there, so current assets of 60 million. Non-current assets, plant and equipment, 8 million. Intangible assets, now this is one you got to look at closely. That's 125 million, so that's quite high, and you want to know why it is high. Now you might just notice next to each of these numbers there is a note, and there's a number next door to that. So you'll see next to intangible assets, you'll see a number 12. What that means is further down in the tax return, there will be a note under number 12 that you can read that will delve further into this particular number. So let's just scroll down very quickly and have a look. Where is it? So where are we? What number was that? It's 18. We'll keep going up a little bit. So you'll find it's 15. So in the notes, here we are, number 12, intangible assets, and this will break it down for us. See, goodwill at cost, 89 million, accumulated impairments, negative 1.5 million, technology trademarks, customer contracts at cost. So what it does here, it breaks down the exact figure of intangible assets, and we'll get that figure of 125 million. So now we know exactly how they arrived at that, and we can see there's a big lump of goodwill there, which personally I do find a little concerning, because goodwill is basically an imaginary number which can disappear very quickly in a downturn for the company. So there we go there. So we just look through here. We can see another thing I like to compare. We can see the current receivables versus the current payables. So you can see that there's the receivables are well in front. I personally like to see that. And other than that, they don't have a lot. The current liabilities, they don't have a lot of debt. Obviously, this company, you can see they're non-current. The difference between current and non-current, the liabilities there, current means that these are all payable within the next 12 months. Non-current means that it's more than 12 months away before these need to be paid. So from my point of view, that's a fairly clean balance sheet. I have no particular issue with that one. And that's just a breakdown of how they book up their equity over time. So you can have a read through of that. Now this one here is the cash flow statement. This is the one I prefer to look at the most. You can see there's three parts of this. There's the operating activities, so the day-to-day business, what goes through their bank account and what goes out. There's the investing activities. This is what they've got from their investments, buying and selling. And there's also the financing activities. This is the one down here, whether they borrowed money, whether they've sold shares to raise capital, whether they've repaid money back. You can see they've borrowed 4 million, but then they've paid it back quickly. They paid out their dividends to their shareholders. So this is the lifeblood of the company, the money coming in and the money going out. So it's really important to have an understanding of the cash flow of a business. And as I said before, there's also notes next to these things. So if you want to find out more information, you can just scroll down to the notes and you'll get more information there. Now, another thing you can do, and when I was looking at this company a few weeks ago, there was just a couple of costs here that I thought that had gone up quite a lot. Now, where was it? It was the software license. I seen that had risen from 1 million last year to 4.5 million this year. And also, what was it? The professional? No, there's one other cost there that went up quite significantly. Can't think which one it was now. Oh, yeah, the contract and consultant expense, which had gone from 4 million to 8.8 million. And there was no notes there to read about that. So what you can do, and what I did in this case, was I emailed the company direct and just asked them the question. And every company will have a shareholder liaison that you can talk to, and they'll answer any questions you may have that you don't understand. So feel free to do that. I did that with this company. Come back with some decent answers for me about why those costs have gone up so much and whether they will be ongoing or not. So don't be afraid to do that as well. And look, look, I'm not an accountant, so I don't maybe have a complete understanding of every figure in here, but what I do is I have a consistent approach to looking at certain figures and just coming up with a analysis that of whether the company is in good shape, I guess, and whether I would be happy to invest in them. See, for trading for me is not just about trading the short term for the day or for the week. I'm looking at companies that I would almost want to invest in for my whole life, but I want to get them at a cheap price and I want to sell them within a few months, and maybe I'll come back to them. I don't want to be trading crap. So this is to ensure that I don't trade crap. I'm actually trading a company that has a little bit of something behind it, and not just a pretty chart. Okay, so that's a bit of an analysis there, fundamental analysis. Obviously, if you're looking at these sorts of companies, I would spend 3 or 4 hours looking through that tax return and delving into it deeper. That's just a bit of an overview of how it can be done. Okay, so the second part of analysis is the technical side. Now, as you can see, I keep my charts free of pretty much all indicators. I'm not really interested in looking at too much, except I will look at the volume, and I will have a look at the stochastic, just to see if I can pick up the momentum, the current momentum of the stock. Now this is HSN again, and this is the last 6 months. You'll just see what the stock has been doing. Now, generally, a stock will move in sort of a wavy motion, and most stock charts you'll look at, it'll be up and it'll be down and it'll be up and it'll be down, and sometimes it'll be down more than it's up, as you'll see in the last sort of 3 months. That's what this has been doing. It's been trending downwards. The 3 months before that, it was trending upwards. So you don't have to necessarily trade with the long-term trend of a stock. We may just be able to capture a short 5 to 10%, even in the opposite direction to what the current market is going. So when I'm looking at charts, I'm looking at just not. I'm trying to avoid trying to buy it at the peaks. See, this has been on a charge here. I wouldn't be buying it at $4 here. It's it's gone up probably what 10% from there, and this is actually a stock I did trade in this part up here. I think I bought him around the $3.60, and I traded up to $3.99 back then. So it's just a way to not buy at the wrong time. Basically, is the way I look at charting. Um, you're not particularly trying to pick the bottom, but at the moment you can see sort of this is hanging around. It's been as low as 313, went down there, had a good day there, went back down to around the three teens, and now the last couple of days looks like it may be thinking about going up again. So as a chart, if I did like the fundamentals of this company, this could very well be a time where I'll be looking at buying this stock just based on that chart, just from my eye, just watching what it's done over the past few months. But that's truly my extent of charting. I don't do any more than that, and just run my eye over it, and make sure I'm not getting into a trade at a bad time, where it's been on a tear and is more than likely going to come back. So yeah, short and sweet. I'll have a look at that chart, and if I really like the fundamentals of this stock, I'll have no hesitation in buying that stock around the 320 mark as it is here today. Okay, so once we have the stock we want to buy and we have an idea of the price that we want to pay for it, then it comes down to managing the trade and the risk properly. So the first thing that I do is I look at the size of the position that I will take. Now, what I've done over the years, I've made up an Excel spreadsheet that that is probably the most valuable thing that I've ever done, because it helps me do a lot of this stuff without me having to think about it. Because I do use CFDs for some of my trading, I use leverage. So I have to make sure the position sizing doesn't get out of hand, and that's where this calculator comes into its own, where it makes it fairly easy. I put in what my capital is, my total capital. I put in the number, how much times leverage I want to use. So sometimes it's 3, sometimes it's 4, depending on the market. So say I've got $100,000 in my accounts and I leverage it four times. That means I'm got $400,000 in the market. Then I will divide that by how many trades I want to have on. Now for me, I normally have 14, sometimes 16 trades, up to that many at any one time. And that's really important, because diversification is a major part of managing risk. It's all very well to be heavy into something that's going well, but when it's not, it can ruin you very quickly. So don't put all your eggs in one basket when you're trading like this. So position sizing is the first part of risk management, and you do have to get that right. So you do take a fair bit of the risk out of your trading. Number two, well, putting on the trade. Sometimes, I mean, that sounds pretty basic, but sometimes that can be difficult when you start out trading, actually clicking the button to put the trade on. Now, I generally put a bid in. Not too often I will just pay the ask when you're trading. Sometimes I do, but generally I've got a price I want to pay, so I'll put my bid in and I'll just sit back and wait for the market to either hit that bid and I buy, or if it doesn't, then I've got other ideas always coming on. So I'll replace that trade with another one. But putting on the trade, as simple as that sounds, it's something that's got to be done, and you can't be too anxious when you're doing it. Sometimes you think you found a winner, and you just can't wait to get the trade on, and the market might be moving up, but you just want to get on, so you buy it at any old price. You've really got to resist that temptation and be really strict with what you're going to pay when you buy the stock. The art of patience. Now, this is something that I really had to work on early in my trading days. Back, I started trading pretty much as soon as I turned 18. I started buying stocks, and I was really impatient back then. even though we didn't have all the technology now where you can see the prices up to the minute, I was always checking. That's the first thing I did, when I got the paper to see what the share price was, and I was always anxious about my shares. So I think that may come over time. You just get more patient, and it's really a major part of trading. Number 4, closing the trade. Now this is also can cause a lot of angst for a lot of people, and it did for me for many years. Now I just have pretty strict rules about when I close. I work just on a flat percentage of how much I want to make on a trade. Sometimes that will vary. If a trade is going particularly well and momentum is still strong, I will put that up a bit higher. But I don't set stop losses. I think I've made a video about that, and I've talked about why I don't set stop losses. But I do set stop gains, where I will sell when I've made enough, and I'll get out of the position and I'll move on to the next one. Now, selling a winning trade is almost as hard as selling a losing trade. That's where greed can kick in. I'm sure you've heard about greed and fear when trading, and when you're on a winner, greed kicks in, and you think, well, I've made 10%, maybe I can make 20, or maybe this is the one that makes me 1,000%. Why would I want to sell it? You've got to just try and avoid that, and you've got to be prepared to close the trade and move on to the next one. Otherwise, you're an investor, and that's okay. If you want to be an investor, that's fine, but you're not a trader if you can't close a trade. And number 5, keeping records. Now, this is something I'm fastidious about. I love numbers, and I can play with Excel all day, every day. And as I said, I've got quite a extensive Excel spreadsheet that I track everything with. So it's really important that you do keep good records of your trading, and once a trade is closed, you look back at the winning or the losing trade and learn something from it. And that's what I find with keeping good records. You can look back and you can learn stuff about that a lesson you may not have picked up at the time, but you can look back in a few weeks' time at a trade, or it might be a stock you've traded previously, and you can look back at the last time you traded it and see what the price action or the profit you made back then, and you can learn a few things from what that stock might do. So managing the trade risk is essential. It's not just about or finding the right stock to buy. It's about managing it once you've decided it is the one you want to buy, an important part of trading. Okay, so in conclusion, trading is a skill that can be learnt. However, like any skill, it takes practice, patience, persistence, and focus. Just keep that in mind. You will get better over time. So don't think that if you're not succeeding straight away, that you're not a good trader, because this is all part of the learning process. And even the bad trades early will teach you lessons. You've got to be wise enough to understand what those lessons are, but be persistent with your trading if you're just starting out. Now this is important, and I might make a whole video about this itself, but part of the process is to work on your relationship with money. The more indifferent your feelings towards money, the more relaxed you will be, and the better your trading decisions will be. Now, becoming indifferent to money is not easy, because it's such an important part of our life, and probably the easiest way to become indifferent is to have plenty, and then you sort of stop worrying about it. But until then, you really have to control your emotions with money, because if you're anxious about money, you will lose it. You just won't be able to trade and focus properly. So that is important, and like I say, maybe a whole another video, that one. Okay, and make sure all your trades are a product of your own conclusion. Listen to people objectively. Make sure a stock fits your parameters, or the parameters you set before entering any trade. As I said, with that idea generation, you can watch the Sky Business Channel, you can go to Hot Copper, you can talk to people for ideas, but you still have to have your own trading system and your own set of rules, and make sure that any stock fits your parameters before you buy it. So don't just listen to people. I mean, if you wanted to do that, just give your money to someone to manage for you. I mean, maybe trading isn't for you, perhaps. So if you can't come up with your own conclusions and your own set of parameters, then don't be trading. And remember, while we are talking about short to medium term trading, this is part of moving towards a long term, as in decades, goal of being wealthy. Do not think of trading as a get rich quick scheme. I'll put this in because I was guilty of that. I know when I first started out, and you know, when you're making your bits, I think I've put a video up about how I made a lot of money during the tech boom, and I thought I was king shit back then, you know. But I realised, you know, this is a long game. This getting wealthy, so don't look at it as a get rich quick scheme. Don't celebrate the big wins, because that's the way you can get ahead of yourself. Just think of it, you know, count your blessings and just keep moving forward. And last but not least, stay humble. This is just a way to make a bit of money and make your life a bit more comfortable. But it doesn't make you a great person, being a great trader. I mean, you can be a great trader and still be a prick. So don't do that. Just try and stay humble. No matter how much success you have, or you know, how much money you have, you'll probably realise having money isn't the most important thing in life. So you want the people around you to still love you. So stay humble and just be a decent human being. And that's about it from me. Happy trading. So yes, so this video has been a fair bit longer than the others I've done. Look, this could almost be like a week-long course if I really sort of sat down and went more thoroughly into what I do, especially how I analyze stocks, because I didn't really go into it too deeply. I had a few distractions going on here as I was talking, so if I sounded a little bit distracted, sorry for that. But yeah, a bit of an overview. You know, for the way that I do it, you may do it completely different. This may give you one or two ideas, something to work on. But that's what it's all about. You've got to find a way, a strategy that suits you, that suits your temperament, that suits your bank balance. You know, maybe you have to take a bit more risk if you don't have a lot, but it's all up to you. So happy trading, good luck, and I'll see you soon.